you also manage risk the way others don't. Every single place that you have mines, I don't mind living at. And I mean that seriously, that you have no political risk. None of these mines.
That's by design. When I was hired by the founder in 1985, as I said before, he said we don't go where they don't wear overcoats in the winter. We manage that risk, and mining's hard enough, and that's what we say. When you start layering on other risks, it just gets much more difficult.
Well, it seems like you also embrace technology. In this, you talk about autonomous mining. What is that?
Well, that's the way of the future. That's when you get vehicles and equipment running on their own, and that makes the mine safer, it makes it more efficient, it keeps the costs down. We're mining right now at a mine about 500 kilometers north of Montreal. We're down below 3 kilometers. So as we go deeper, some of our best drill holes are below 3 kilometers. That mine's been running since 1988. So that's where we're working on autonomous equipment to make it safer, but also more productive.
Okay, that's important because I know the Caterpillar was telling me about that, and I didn't know whether it's actual, whether it's test pilot or whether someone's really using it.
You
guys are there.
Yeah, we're testing it now, but what we do is we run those mobile equipments remotely from the surface now, and between the shift change, where we're down without that equipment running for an hour, we can keep that equipment moving. Much more productive in an underground mine.
Okay, now, one of the reasons people always say to me, Jim, you like these stocks, and you're a growth stock. Well, let's say, there's these outages that occur, and nobody's ready for them, or it turns out that the ore isn't as good. I mean, I know that at various times you had a mine down for 60, 70 days, but that's, with your pastiche of mines, it's never going to hurt your quarter.
Well, I think that's the key, is you run it like a portfolio.
Right.
And you ensure that you set expectations so that you can deliver. And as we said, you're dealing with nature. And the mine you referred to, we had some instability issues. We closed it, but we didn't give up. That mine, we're mining 1.6 grams of gold grade underground, one of the lowest grade underground mines in the world, and we're making good profit. That mine had a record quarter. So we reopened it after those issues. We stayed away from that area. But it's about your technical skill, but it's also about understanding risks. But it's also about thinking long-term. It's a long-term business. You have to make the investments when others are not making them during those periods when gold's quiet.
Okay, now, on Wednesday, the Fed is going to pronounce a cut, I believe. And one of the reasons why Jay Powell will do that is because inflation's running below the Fed's target. Is it not... Isn't it uncharacteristic to have inflation below a target and gold soaring here?
Well, I think, yes, it is. But I think what we see now is we see negative real interest rates. So we see a substantial amount of money that's paying a negative return. And what we're hearing in the last few weeks from our connections in Europe, the gold funds are getting inflows. It starts there. They understand gold. They understand risks. So we're in a period now where gold blossoms. When you have low real interest rates and negative, gold does well, and then the inability of the industry to respond to a higher gold price is, I think, the key to get it going forward. We also have a situation now where we've been grinding for 6 years. We've built the base. It's broke through that technical resistance at 1360. It's starting from a higher base. It will hit the all-time highs of 1900 to 2000 because we're starting from a higher base than we did back in the late 90s.
Well, you've been dead right on this, and a lot of people doubted you when you came on, and not me. Gold should be part of everybody's portfolio.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.